Welcome to day 3 with the one-on-one, training from 0 to pro with D, and then it's been nothing short of, interesting right here. So far so good. We've been talking about a lot of things: support, resistance, exhaustion point, break of structures, change of characters. And if you've not seen the previous video, make sure you go ahead and watch that video, and then leave a comment for that video, and then just tell us what you feel, give us the feedback and shit. Well, today we will just be going in for question and answer sessions, right? So far so good. I think currently Rafiu has a question about the charts, and then we'll just pass it to him. So Rafiu, your question basically,
day 3 of trading with D. Is he shoot, or what would I say? All right. So my question, I think I'll have to stand up for this question. So basically, what I'm trying to, let me just click it here. All right. What I'm trying to ask right here is, from this particular point, right? I'm trying to backtrace, saying when price was still similar to this particular point, I wanted to take a trade. So for me to take that particular trade, I then backtrace to this exhaustion point, right? At this particular exhaustion point, I can see my signal is immediately taps into the exhaustion point. I then take a buy, right? So this particular point at which I'm taking a buy, what I'm trying to ask is, how do I know that? Or what am I waiting for? What exactly am I waiting for to probably how would I say, to probably take the trade, or close the trade? But I wouldn't say close the trade. I would say what exactly are the symptoms at which I can say that price is going to close here, maybe based on any analysis on the charts. Did you get my question? All right. Yeah.
Okay. So basically, so very first thing is understanding that the chart literally works with time. Each candlesticks are based on the time frame that you're on, and then now we want to mark out that exhaustion point that you're talking about. So you're going to mark this out right there. Now this is the exhaustion point you're talking about, right? And then you waited for price to tap in there, and then you took your buy. Yeah, you understand? Now first thing first is you can either wait for a repeated activity. You understand? Repetition. I think my repetition is correct. I don't know.
So when you call this entire sign the exhaustion, the exhaustion, let's say area. So what's the point? What's the exact point?
The exact point is that point that week. The main essence of exhaustion is price tapping here, yes. Then boom. Let's look at this particular thing right here. So we have the opening price, and then this particular point shows us the lowest price got to. You understand? Now the fact that it is showing us that is that whatever happens when price is moving like this, boom 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 boom, it comes down, it changes to red, goes up, it changes to green. Now price was coming down, going red, all of a sudden boom, it will now leave a very, very good significant wick. You understand? Something like this. Now this is the exhaustion.
Yes. But the point is the lowest point.
The point is everything here is your exhaustion. You understand? Everything. That's why I'm marking it. That's why my box is like from this particular opening price to the part or the lowest point where price got to. Yes. So now you're able to now tell that immediately price tapping there, you want to put your stop loss below this exhaustion point, hoping that price will respect this exhaustion. Then you now start opening the trade. We just give you a 1 to 2 weeks to the board, or 1 to 3. So let's imagine now you take your trade based on the, let's say the opening price of this particular candle, which is this point here, right? You set your buy limit there. You understand? Now you put your stop loss slightly below this exhaustion point, the end of the exhaustion point, which is the lowest price, right? Now you're not expecting 1:2 or 1:3. Now you go 1:2, you go 1:3. Either ways, depends on your weeks to the word, and then they are done for that trade. Did that answer your question?
I think from your explanation, I've been able to finally coin out the words that want to ask the question. So I think the question that I'm basically trying to ask right here, is, I'm using my exhaustion point. I think that's a clear stated fact, right? So immediately price taps into the exhaustion point, I know I'm going for a buy, right? So the question, or would I say the answer to the question, let me say the question that I wanted to ask rather is, the point at which I want to make sales up to, and I want to make profit up to, now is it going to be dependent on other analysis? I know obviously price is going to go up. When the price goes up, price can just stop above a little bit here. It doesn't mean the exhaustion point still didn't work. It worked, it respected the exhaustion point. So I'm trying to say the point at which I'm going to, take profit up to, like based on my analysis, I want to take significant profit. Is it now going to be based on other analysis that I know that, okay, I'm trying to work with another candlestick to say the point I'm going to take my profit up to is going to be a particular point here?
Yeah, good question. That question now is, our answer is based on two things. Right? First thing first is knowing your risk to reward, right? Yeah. That's the very first thing. Now, risk to reward enables you to, regardless of whatever the market wants to do, right? You want to just stick to particular risk to reward. Now, your risk to reward is also going to tell you in the long run how profitable you can be on the charts. You can be making profit, you can be losing. But if you don't have the data as regarding to your risk to reward, first and first, risk to reward. Secondly, are you seeing a rejection point where you think price can reject from? Looking at this now, if you use the 1:3 risk to reward basically, or 1:2, we could say that yes, of course, we could see that if we turn this into a line chart, we could see that there is also a major rejection point somewhere around here. So my take profit can just be on that major rejection point. Why am I waiting for price to come there? It's because we already established before, using our previous knowledge, that if we have, let's draw this now, if we have price doing like this, price breaks out, price come down like this, respect it, price came, price broke out of it, then price came back to it, we should expect something like this. Why is that? Because we can see that this is a resistance, this is a breakout, converts to a support, there's a breakout,
support, resistance,
then support on resistance. I don't know if you're getting. So if you are buying off a exhaustion point that is around this point here, you understand, you can set a target to this particular point because you know that there is also a major rejection point that is going to drop down.
Yes.
So purely that's what happened here.
Yes.
That gives us an idea of where we want to,
take your profit, maximize your profit, right? And then your risk to reward. So those are those two things. Looking at major rejection points and where you think market can potentially reject from. That's one thing. So also your risk to reward, basically.
But I feel risk to reward
should be the first. That's true. Risk to reward should be the first because you cannot tell. You cannot really. You can see it could just get to a point and then you just start panicking. But one thing is certain, right? What is certain is, let's imagine now that let's just take an example, right? You come back to this chart now and then you take a sell from here, right? Now you take a sell using this particular thing, right? Put your stop loss here. And you want to set the target, and you set the target here. Look at it. Bringing it back here. The price stopped there. Price did not stop there. Do you understand? So if for the fact that price did not stop there, does that mean you will not take your profits? I don't know if you are getting it now. Does that mean you will not take your profit because price did not reverse there? Do you get? But it all still comes down back to what? Your risk to reward. So the most important thing is the risk to reward, and then sometimes you can target based on either chart patterns, support or resistance point turning to each other, major rejection points, and you can also do it based on let's say if you are going to swing trade a particular thing, you can do it based on psychological levels. Psychological levels are the same thing as the support and resistance, right? But they are just round figures. You want to buy this phone, you won't buy this phone at a price of 225 naira or 262 naira. No, it's like you want to buy something, you are paying 300 naira, 500 naira. Those things are round numbers. It's like you are selling the phone at 300 naira, 500 naira, or 3,000 naira, 5,000 naira, $5,000, blah blah blah, around figures. All these numbers here, you can still see psychological levels there. Now, if you go in there and you start clicking on round numbers, go to the past, you'll see how price has rejected of it. So do you understand? So all those things are just basically what you could potentially look out for, but most importantly, your risk to reward is what you have to document down. So if your strategy is 1:1, fine, you stick to 1:1 no matter what happens, no matter how many pips price wants to go in that direction, you stick to that 1:1. If you're going for 1:5, no matter what happens, if price don't hit your 1:5, you're not exiting. Why? Because you already have a strategy that proves that 1:5, after you've back tested, 1:5 could occur based on that strategy. But based on my strategy now, don't go above 1:2 if you are trading gold. Based on my strategy, don't go above 1:2.
So now, what you are trying to,
do you understand?
what you are trying to tell us now is our risk to reward. We knowing our risk to reward and determining the risk to reward.
Exactly. To strategize the trade. So you have a plan before you take a trade. You're not just coming into the trade blindly.
Yes,
or because now because you have a buy here and then you are expecting price to just continue going up and then all of a sudden it's just pulling back against you. If you had 1:2 take profit, if taking your profit and you don't have any business with any of that thing that's happening in the market. Do you understand? Don't have any business with any of that thing that's happening in the market. So I hope I really answered your question though. Answer the question. Nice. So Peter, do you based on everything we've talked about, do you literally have any questions so far? Do you literally have a question so far?
I think I understand.
Okay, so even from what we've learned previously, that which is like support, resistance and shit. All right. So based on that, it's been like a really interesting what's it called now, time learning together. And then I just want to break down this for the viewers, right? Introducing them to what the details of each candlestick is like. So just come, let me show them this particular detail because I didn't really explain this to them on the video. So now this is how every candlestick forms. Okay, so every candlestick literally tells a story, and what each of these candlestick shows you is, number one, you have a body, and then each of these particular boxes are bodies, right? Now these particular tiny lines you see are called wicks. Now body, then these are called wicks. Wicks, because there are two, so they are not just one, but the body is one, so the body. Okay, now then on a very red candle, which is a bearish candle, that gives us the highest point you see gives us the opening price, while the lowest point you see gives us the lowest price, and then the point before the lowest price gives us the closing price, and the highest point before the opening price gives us the highest point. Okay, now you have this particular bearish bullish candle, which then gives us the highest point, which is the highest point the wick got to, and then we saw price push to the downside. The price came down again to this point and then gave us a very good opening price. This is where price started from. Price pushed to the downside, then it gave us a lowest price, which is what is here, and then we see price push to this up, and then price got to this point here, and then price came back here and then closed at this point. So this is just understanding how the candlestick literally works. So you have to be able to do all these things and be able to just bear in mind how they work. So I'm going to take a screenshot of this so I'll be able to share in the community. Good. So now with this, now you can easily detect and know what story your candlesticks are saying. So thank you guys very much. And then I think with that we end the first week of this particular training. And then if you've not seen the previous video, make sure you go ahead and view it. And then the rest of these days will just be us taking a stroll and then so on and so forth. So enjoy the rest of these videos. Peace. Thank you. So
Come on! Why you say that on your body? Are we going to again?